Hi, everyone. I think we're ready to get started. I'm Judy Reinerson, and I'm here to welcome you to K&L Gates. Yes, we are a law firm and a global law firm, in fact, and I am delighted to welcome you here. I joined K&L Gates back in 2016 because payments is global. You can't do payments in just one place. You've got to be able to connect around the world. And that's why K&L Gates was a perfect fit for my practice. I do emerging payments, crypto, mobile apps, person to person, all that fun stuff that keeps me practicing law, even though my kids go, Mom, are you sure you want to keep doing this? It's really fun. I hope to see some of you at the Singapore FinTech Festival in November. I'm going to be going to the IPA boot camp just this week, and we are just so lucky to be in the payment space and to be in an area that is so much is happening. And it affects people. It affects businesses. It affects, parents, kids, and families. And this is why this particular panel is so important, because it is really shockingly sad how many people in our country are just not financially healthy. And there's no reason for this anymore. We should be able to fix this. We should be able to answer this. We have tools now that we didn't have even 5 years ago. And so I'm going to hand this over to Maria. To Deborah first, and then to Maria, just to let them share with us their knowledge in this incredibly important space. Thank you.
Thank you so much, Judy. Hello. Hi, I'm Deb Baxley, and I am one of the co-founders of NYPAY. Oh, stop it. I'm sorry, that's my brother calling me. Okay. I'm one of the co-founders of NYPAY. We founded NYPAY in 2010. I can't believe it's so long ago. At that time, I worked for Capgemini, and it's been a labor of love for all these years, doing in person, and then we moved to virtual and a combination of events. And interestingly, I met all my business partners, and I now have my own firm through NYPAY. Incredible. So that was one of the smarter things I stumbled into in my career. Again, I'd like to thank our host, K&L Gates, and our sponsors, most importantly, UNFCU, the event sponsor. Thank you so much. And we have another sponsor, Lithic, which is an open banking fintech. And so I thank them as well. This one is not up on the website yet, but on October 14th, we're having another in-person event at the FinTech Meetup office, which is somewhere in this neighborhood close by, October 14th on cross-border payments. And then we're in the planning stages for, we have some ideas on some non-controversial topics like APIs and open banking, stable coins, and so we're working on those. By the way, if your company is interested in sponsoring NYPAY or an event, just contact us. The only way we can remain afloat is through sponsorship, and continue to run these great events, and that we can all benefit from the connections we've made. And if you're interested, we always have room on our events committee to help us plan events. So we'd love to have your participation there if you want. Tay is one of our events committee people. And I'm thrilled personally to bring together this panel working at the intersection of financial access, innovation, and inclusion. And we have Kiva on the panel, which I'm really excited about. I've made over 1,000 Kiva microloans since 2008 in 59 countries. So I think it's a wonderful organization. So we'll go deeper than the headlines tonight. What is financial inclusion, and how does it work with the cultural geography? How do we explore what's working, what doesn't work, and what kind of collaboration we really need to move the needle? So with that, I'm going to turn it over to our wonderful moderator, Maria Dalbert, Further Advisory, to introduce the panel. Thank you.
Hi, everyone. So we will do a panel where we're going to sort of introduce ourselves a little bit about how did we get into the focus of financial inclusion. And then we're going to talk through sort of the the definition of wellness, how it's evolving, and innovation and things that will affect what's coming next. My name is Maria Dalbert. I'm one of the partners at Tredence Further Advisory. We are an advisory team that focuses on financial services and banking, but also broader than that. And we are now part of an AI and analytics firm called Tredence that is focusing on the last mile problem of how do you bring the strategy into execution using technology and AI. And so we work with clients across the spectrum. My background, again, is looking at the payments, banking, and digital product development and transformation. And so I've been very fascinated with this topic of financial inclusion for many years, tried to it failed, but tried to work in building out a financial inclusion product myself at one point. And so I'm really excited to hear from this group because they are in it and thinking about the evolution of financial wellness and how it's changed and what is coming next. So, yeah, why don't you go for it?
Thank you so much. And thank you for the gracious introduction, Deb. My name is Martha Brantley. I'm here on behalf of Kiva. I look after strategic partnerships there. If you have never heard of Kiva before, we're an organization that's focused on opening financial opportunity to all. And the primary means that we do that is by helping sort of ordinary folks around the world help to crowdfund microloans also all over the world. So we were founded in 2005 when 5 people each contributed $25 towards a loan to a woman named Elizabeth in Uganda. Since then, we have made about $2.3 billion in loans, about $600 at a time. So reaching several million people and in 94 countries to date. We also started operating in the United States in 2011, seeing that there was a need for access to finance here. And here we work really hard not to compete with, banks or CDFIs or credit unions. We offer zero interest, $0 fee loans up to $15,000. No credit score required, totally different underwriting process. And so we really try to be the first rung on the financial ladder for folks, no matter where they are in the world. So as you can probably guess, we couldn't do anything without payments. All we do all day long really is facilitate micropayments, both out to our partners around the world, but then back to all the generous individuals like Deb that are supporting borrowers to realize their dreams.
That's great. Thank you for sharing that. I actually didn't know the scale at which Kiva is 2.5 billion. That's incredible.
Thank you.
So I'm Beth Brocklin. I'm with the Financial Health Network. We are a nonprofit based in Chicago, and our mission is to improve financial health for all. We were founded about 21 years ago now. And at the time we were called the Center for Financial Services Innovation, CFSI. Some of you might recognize that name. And at the time we were really founded to focus on the challenge of the underbanked consumer here in the US and how technology could be leveraged to increase financial inclusion. So to our topic today. Fast forward many years, the iPhone was invented and mobile banking became much more ubiquitous. There was a financial crisis, which made it really clear that a lot of people in the US, the majority were not financially healthy or were financially struggling. And so we really set about to focus our mission, to refocus our mission on the outcome we seek, which is financial health, improve financial health for all. We developed a methodology for defining financial health and measuring it. And today we work with financial institutions, financial services companies of all kinds, and employers to understand the financial well-being of their customers and of their employees and of their communities, and then to design strategies and products and solutions to improve it. We do that in a couple of ways through a membership network, which is the area of the business that I lead. We have about 75 companies that are actively part of our network that are committed to this mission. And, we really facilitate kind of a community of practitioners. We do advisory services as well to help companies develop products and solutions within their company. And we do a lot of research to define the problem and to lift up the solutions that work to improve financial health for all.
Hi, I'm Janice Ong. I'm with UNFCU. So first of all, I want to thank Deb for approaching me maybe about a year ago to explore this opportunity to co-sponsor this event. I mean, NYPAY, UNFCU, we're both a New York-based organization, I think, and I look after the payments business for UNFCU. I lead the global payment solutions, and I want to thank a lot of my colleagues who are here today to support, including my own team, my boss, my immediate colleagues who run the contact center, the foundation, and the corporate com PR site. So thank you all for being here. So as far as NYPAY is concerned, we also work with NYPAY. I think, Brion, we talk about the foundation on the Kilimanjaro initiative. So, I mean, NYPAY is an organization that's known to us very well for many years. So we appreciate the partnership. As far as UNFCU is concerned, we've been around since 1947. I've been with the organization for 3.5 years, but payments has always been the soul of my heart. I came from a background of international remittance with MoneyGram for 15 years, started in Australia. So I know a lot about global money movement and in terms of people move around the world as far as their life support system, sending money around the world. Now at UNFCU, it's very similar as well because we provide the payment solution to our members. Our members are the UN employees. Now, as you might know, we are a credit union that serves the United Nations. So the employees around the world, so they're practically in 200 countries, and their immediate family members are also our members. Now, the way how it works is why payments is so important for UNFCU is because the UN employees will receive their payroll and they all have a UNFCU account. And it's kind of unique, right? When you think about a US dollar account being made available to UN employees and their immediate family members around the world, that's kind of unheard. I mean, I work at Citibank. Even as a Citigo or private, you've got some Citi bankers here. Even as a private banking client of Singapore, of high net worth individuals, you may not necessarily have a US dollar account, but I think what UNFCU offers is very unique. So I think we have a very unique value proposition. Today's topic, I think, is really exciting. What we do in UNFCU, a lot of that is cross-border payments. Domestic, obviously, US, because of the fact that it's a US dollar account, we still have, some US domestic activity, but the bulk of our payments is actually cross-border. So, as far as foreign exchange or, whatever our members need, sending money to an account or sending money to a mobile wallet. I think you talk about the fact that mobile payments is really the key driver of how people are receiving money and sending money. I mean, the UNFCU business model is all about digital. So we're very much a digital banker because, our members are using our digital banking to basically transact. So thank you for the opportunity and look forward to this panel conversation today.
So let's dig into, a couple of you guys alluded to this, the question of defining financial wellness. What is financial wellness in today's world and how does context shape it? And it's a broad question. I think we can start by maybe focusing in on the domestic context. And Beth, if you could share a little bit from what the research that you've done, and then we'll start to broaden and think about the context how the international context can shape and change it. And building on that, Janice, you could take us in that direction as well.
Okay. Sure. So maybe I'll start with just how we define it and what's the state of financial health in America, according to our research. As I mentioned, as we went on this journey as an organization, really realizing that access to a banking account isn't enough. We really need to focus on improving outcomes. We created a definition of financial health, which includes a couple of different components. We believe financial health comes about when one's day-to-day systems are working to manage your financial life and your obligations, that you're resilient, you're able to be resilient in the face of shocks, and that you can be on a path to your long-term, reaching your long-term financial goals. So there's sort of the day-to-day resilience and long-term components of financial health, according to our definition. And we, in the measurement framework that I alluded to earlier, we set out 4 pillars of financial health: spending, saving, borrowing, and planning. And within that, there are a couple of different components. So for example, within spending, the ability to pay all of your bills on time and in full, to spend less than you make. Within saving, it's short-term savings and long-term savings for things like retirement or other financial goals. Within the borrow pillar, we look at having a manageable debt load and a prime credit score to be able to access affordable credit. And then within planning, the ability to plan financially, within your household, and having appropriate insurance. Those are the components of financial health that we look at and that we measure through our own research, and we encourage organizations who use our framework to measure within their own institutions. So I'll say a few words about the state of financial health, and then we can kind of get into a discussion about some of the drivers that you were asking about, Maria. We have been measuring financial health in the United States year over year since 2018. We're now in the 8th year of an annual study we call the U.S. Financial Health Pulse, which is a nationally representative probability-based sample of more than 7,000 U.S. households. We do this in partnership with the University of Southern California, and that enables us to track the state of financial health over time, as well as for individual households, because we have a certain subset of respondents who respond to the survey year over year. And we ask, over 100 questions about, financial characteristics, household characteristics, employment, disability, health, a variety of factors to really understand what are the drivers of financial health and how that's changing over time. What we found is that consistently since 2018, at the macro level, about 70% of people in the US are not financially healthy, according to our definition. We have 3 kind of tiers of financial. Coping category, which means that they struggle with some aspects of their financial health. And then 15 to 17% are financially vulnerable, which means they struggle with all aspects of their financial health. And what's really interesting is that at the macro level, that actually hasn't changed that much over time. We can get more into it, but we did see some change during the pandemic when lockdowns, kept people home, and therefore they were spending less and able to accumulate a little bit more savings. There was also an unprecedented influx of government support that enabled people to build up their household balance sheets a little bit. And so we did see financial health increase slightly during the pandemic, but then it's sort of back to pre-pandemic levels. What's very interesting, though, is when you get down to the individual household level, is that it's much more dynamic than that, based on life events, based on a whole host of factors. About a quarter of our sample moves from tier to tier. So they may be financially coping in one year and healthy, and then maybe they have a job loss or a major medical event, and they can switch. Financial health is very dynamic at the individual household level, even if we don't see a lot of change year over year at the macro level.
And is that more driven by shocks in your experience, or is it all, or is there like sort of trends that impact it, or is it a bit of both?
Yeah, I think it's a bit of both. I mean, I think at the individual and household level, it's often those life events that I mentioned. Someone might buy a home, or that might cause them to become more financially healthy, right? Because now they have an asset. They're on the flip side, they could have an adverse medical event and now have a lot of medical debt that they're struggling to pay off. That's going to impact their credit score. But there are also macro trends that can influence. And so we're about to come out with our newest data. We publish a study once a year, which we call our trend study, which a lot of this data that I mentioned comes from. And in our latest sample, we can see already the impact of the repayment with the end of student loan forbearance. People are starting to report that their credit scores are impacted by the fact that they now have to begin paying student loans. So we do see some kind of global influence, but I think a lot of it is at the household level as well.
Hey, just wondering, have you picked up yet on the trend where people pay for their groceries by credit card, which is certainly very unhealthy.
The buy now, pay later phenomenon specifically, or credit cards. Yeah, we have a whole a couple of research projects specifically where we looked at buy now, pay later. I don't know those data very well, but I could certainly surface them and send them to you after the fact. What I do know is that you're right, it is an increasingly common way of, especially among younger generations, I think, paying for day-to-day. And it's not just sort of what it's designed for, which is, ideally longer term things that you need to pay for over time. People are using it to pay for day-to-day expenses in many cases.
I'm curious, do you think that there may be almost underreporting of the risk factor there because it's being dissipated into the traditional credit plus buy now, pay later?
Yeah, and those buy now, pay later products aren't reported to bureaus. And so there's no ability for anyone to sort of capture the full totality of someone's situation if they've got multiple loans with multiple providers.
Just to kind of, you mentioned about spend, save, borrow. I mean, at UNFCU, we do a lot of education on financial wellness. I think the way I look at financial wellness is a bit like your physical wellness, right? What do you have to get healthy? So, in this instance, obviously, is, to think about budgeting. How are you spending? How are you savings? And at UNFCU, we do provide, we try to really share a lot of those education to our members in terms of understanding and think about financial wellness to get to financial well-being. I know we haven't kind of touched, but at the end of the day, building your financial wellness today, think about how you're spending, think about how you're building your saving funds, and think about the needs to borrow will kind of take you there. I think at UNFCU, because of our membership, we serve a lot of the UN employees around the world. And the UN obviously have a lot of the mature employees as they retire, because once you are a UNFCU member, you are a member for life. So it is very important that we support our members on this longevity, on this lifetime journey, which financial wellness is a big part of it, right? Because while they're working, they obviously have a salary that comes in, but once they stop or retire, then we really want to make sure we are supporting their overall financial well-being all the way to their retirement age. So there's a lot of that we do as far as at UNFCU to make sure that, we provide that education and support. And clearly, payments is important because as we talk about, our members are all around the world. And if they have their savings or anything with us, it's also very important that we make sure they are able to access their savings very easily wherever they are in the world. So that's something that, and that obviously supports their overall financial wellness, because at the end of the day, financial wellness kind of takes you to financial freedom, right? If you have financial wellness, at the end of the day, it gives you that freedom to get to a state of retiring, travel, do whatever you need to without having any financial worries or concerns. So, and that's kind of where, we emphasize a lot, we focus a lot on the UNFCU side in terms of making sure our members, financial needs are being taken care and being supported regardless of where they are in the world. So we have solutions and services and products that cater to them to ensure they are being, supported for their membership lifetime with us.
So I'm going to pick up on that a little bit, or did you want to add something?
Yeah, I just wanted to add, I really loved hearing that talk about, this journey towards collecting really robust outcomes. And, Kiva as an organization has been on a similar journey, which is like, it's great to talk about the number of dollars lent, the number of people that have gotten loans, but like, what did those loans do? And I think, when we expanded the international context and looking at many, many countries, what we found is like, it's very difficult to have objective definitions for, health or wellness that fit from, Brazil to Georgia to the US to, Indonesia. And so what we tend to do is rely a lot on sort of people's self-diagnosis. Do you feel more confident? Are you more able to feed your family? Were you able to meet these basic needs? Do you understand the terms of all the financial products that you use? And like, are you able to manage your debt? I think buy now, pay later is actually a great example of that, because it, to me, it seems very, risky and unhealthy. But if you're operating in a market where there is no consumer credit, you don't have the option to get a secured card and then build a credit history. Like, most people work in the informal market, and so they're not receiving a regular paycheck. Like, BNPL might actually be a brilliant solution that allows you to manage expenses in a way that actually more accurately reflects your incoming cash. And so that's a reason why I think we love to combine these like robust quantitative assessments with people's own diagnosis of how they're doing, and also see, like, does it align? Like, I would love to know, for example, if like 70% of Americans would say that they are either coping or vulnerable. I don't know. It's a really interesting question. And I just wanted to speak to that international context, because I think it's very difficult to generalize across, many, many countries.
Yeah. And it sounds like also subgroups, right? The answer for someone who's getting a maturing student loan might be different than their parents, who might not be as acutely aware of the context under which they're now making decisions about early career choices and things like that. So I guess the thing that's coming up for me is I love the idea of thinking about these different buckets of spending and payments, saving, borrowing, and planning. And I guess you both all alluded to like innovation in this space. Like, what are things that are allowing individuals to make the right decisions? The thing that's kind of, maybe because I'm obsessed with data and personalization, I'm thinking about, there's all these tools, and building on your point about buy now, pay later, like, what are the innovations that are working well, and who are they working well for, and what makes it work well, and what maybe makes people use, quote, the wrong tool for them, the wrong solution for them. There's education is one facet, but what are the things that are working well, and why are they working well? I guess I would say, in whether it's in the international or domestic market, I don't think it matters. But what do you think the characteristics are that make it work?
I think when I think about payments, I think instant payments is becoming a key, right? Getting money faster to the recipient, the beneficiary, which, caters to medical bill, whatever. Kind of a brick and mortar. You don't actually have to go into a brick and mortar. But I think the whole instant payments is really helping a lot. And there's a lot more instant payment solution happening around the world, because it really gets the money to the recipient instantly, and it's fast. And, you know, I don't want to talk about the correspondent banking model or whatever, but I think sending money, you know, through all the instant rail, you either get it there really fast or it just gets rejected. I mean, I've got somebody here, Alison from the Fed, you know, she's the Fed now go to market. And we know how the instant rail world, right? It's success or out. There's no kind of, you know, exactly. So I think that's really been, you know, really a good, and the whole mobile payments, you know, Kenya and M-Pesa, plus there's a lot, many players out there around the world, India, Brazil, everywhere. I think we're seeing some major transformation when it comes to digital payments, etc. Right.
In addition to the fast, easy, would you also add a predictable cost?
Yes, I think in general, when you send money through, you know, just a mobile payments, you kind of get what you sent.
Proportional cost.
Yes, and correct. And the cost is generally, but you know, the amount that you're sending is obviously smaller, you know, rather than, you know, sending through a bank account to, you know, those are different. But if you just want to get money easy, fast, quick. Now, Zelle is another example, right? It's more value, but it takes the money there really fast within US. Yeah. You know, I think fraud that is kind of debatable, right? You talk to a lot of the instant, there's still not enough proven data out there to kind of quantify what that fraud. I think the bigger issue with fraud now is the scammers, the scam. The scam world is becoming bigger and bigger. And, you know, unfortunately, humans are falling victim into some very intelligent and creative scammers out there. So, you know, whether you classify, is it because of the fastness that's the problem, or is it because there's just a lot more intelligent scammers out there? And the reality, there's a lot more intelligent scammers in the world. I mean, you probably have heard about human trafficking problems we are facing around the world. In Cambodia, you have centers that are being built for people just scamming people around the world. I think they are even, you know, in a lot of countries. I always say, if you haven't watched that movie, what is it called? The Beekeeper, right? That's kind of what's going on. And it's kind of quite true what is going on in terms of scam.
I think we could add that M-Pesa, when it started, was either sending to your family or it was in-person transactions. So that's a lot less likely to be, I mean, you can still get scammed in person, but it's not, you know,
Harder to scale.
yeah, most of the scammers are doing remote, you know, e-commerce type payments.
Yeah, that
I have a question. Do you think that, I think one of the big changes I see in the last 10 years is online gambling, sports gambling, and I've got 20-year-old sons who are, and I worry that they're not saving money. And I'm wondering if you see any impact of this new, like, it seems to me it's just, you know.
explosive.
Well, also the investing in stupid crap, like on Robinhood. Yeah, crypto scams and all that stuff, not just gambling.
I'm focusing on gambling. I'm not going against crypto at this point.
Gambling and wellness probably are not.
I'd have to find, it's so interesting, but this is a topic that we're very, very interested in exploring more in our future research because we are similarly very concerned. And I'll have to find after this conversation the actual citation, but it was, a report came across my desk, I think from a government source that looked at specifically the impact of gambling, sports betting on financial health and saving in particular. And I think the statistic was something like for every dollar spent on sports betting and gambling and online gambling, it's like just under $1 that actually is not going into retirement savings. They were able to make that very clear correlation that people are substituting this form of spending and not using that same dollar for saving, or just about that same dollar for saving. It was an alarming statistic.
Right.
Also, I think presents a very good opportunity to intersect with scamming. I'm not sure how many of you all read the any articles about like the fake cricket league. But you know, the availability of technology that makes these sports and leagues that, you know, folks in the United States or Europe never would have known about, gives them the opportunity to place those wagers. It does create, you know, excellent cover, even if gambling were not, you know, sort of financially detrimental in and of itself. I think that's an interesting, you know, use case for technology, maybe not one we would promote, but it to me, it does sort of raise the risk. Like you said, you know, very smart people are coming up with scams that are good enough to fool other very smart people.
Yeah, right. Kara, and then back. Yeah, that's okay, but it's interesting. I think this is.
If you don't mind, I wanted to ask about product design
Mhm.
and get a perspective based on all of the things we're talking about, buy now, pay later, like all of these intervening factors and new dynamics, and the risk that product design for financially vulnerable populations, ivory tower, or we in financial services find the wrong product because we're not users of it ourselves.
Yes.
I use the Chase product for my son as a first account that he funds, my husband and I, but guess what? It's only permission for one parent to have access to. Whoever designed this program, like, just contemplate that there might be two parents who care about the I'd love to hear from each of you how you think about how you get to know the customer needs that you're designing, battles you pick, how Kiva might decide to expand into the market. What are the, you know, new American risk factors that are surfacing that are getting your attention? Because that's an overwhelming process that's informed by a lot of factors, but the prioritization is where you can have your.
Well, I mean, I can start by saying, I mean, I think like a great example of that is mobile money. It is transformational. It is enabling so much, and smartphone access is really gendered, you know, so it still creates significant inequity, especially in more rural areas. And so that's a great example of an amazing transformative product that is not able to serve its audience perfectly. Kiva's approach is pretty simple. So we don't actually lend directly outside of the US. We work with local financial institutions. And so for the most part, we don't dictate to them like what products they should offer, to whom they should offer them. We try to influence, like we try to say, you know, like, let's make sure that, you know, you're not over indebting everyone, that your client protection practices are on par. And I'd say our biggest value add, or one of our biggest value adds for those partners, is that they will sometimes come to us and say, you know, we know that 80% of the people living in this, you know, area are farmers, and we're making no agricultural loans. Why? And so then we will often give them money to do mystery shopping or focus groups. And we did a lot of that actually in the aftermath of well, or in the you know, years following the pandemic. What do they need to do differently to get more women clients, to get more refugee clients, you know, to and so that often, like, it all comes down to locally driven and like you said, very consumer centric insights. So sometimes it's really low tech. It's like if you're serving a, you know, displaced community, hire people from that community that speak the language. You know, make sure that your product material is available in those languages. And sometimes it's a lot more high tech. You know, it is needing to get payments instantly. It is needing to be able to, you know, send money to people across the border or in other places. So it can be both. That's, I think, sort of the message that we always try to adhere to, that like, certainly like my colleagues in San Francisco don't have a good concept of what a borrower in Tanzania needs. That probably she knows better than anybody else.
Yeah, I'm so glad you asked this question. I have a lot of thoughts on this question. The first, I think I will just echo what you just said, because we always go back to the importance of measurement, right? And like understanding your customer, understanding their needs, and disaggregating data. Like, it's one thing to survey your entire customer population or your entire employee base or your members, but then to like break it down and try to understand the experiences of specific subgroups, whether that's you know, by race or gender or, you know, disability or geography or whatnot, to really get specific about the needs that you're trying to solve for, and then design based on those needs and track whether or not what you're offering is making a difference, right? So measurement and the importance of measurement as the starting point is like a thing that we really emphasize. We're also very big proponents of behavioral economics as just kind of an approach to understanding product design. Like, there are a lot of just human biases that we all share in terms of like, managing money is hard and it's complicated, and we often have the best intentions, but then we don't follow through on those intentions. And there are like some very simple evidence-based design approaches that can really make a big difference for financial outcomes. Just one example is like automatic payments, right? Like we all have the best intentions. You can set an an intention to save, but if it's not easy and if it's not automatic, it's really hard to follow through. So the ability to set up an automatic pay, transfer every month from your paycheck into savings can actually have a really, really big impact on savings over time because it's just set it and forget it. We recently published our first set of financial health standards to answer specifically this question. We looked at the evidence base and said, like, what are we, starting with spending, spending products, checking products and credit cards specifically. What do we know from the body of collective research that we've done, that others have done, leveraging best practices in behavioral economics to say, like, what are the design features, whether it's, the design of the product itself, kind of the policies behind the product and how it functions, and the kind of the experience of onboarding and access to the product. What are the key features that drive better outcomes? And we've published a set of standards that we're calling on the industry to adopt. If your checking account or your credit card doesn't meet all these standards today, which one, can you commit to adopting? Because we really want to raise the bar.
Some examples of this.
Yeah, absolutely. So one example is the ability to see and manage recurring expenses. There's evidence that shows that, it's very hard to keep track of that. And just a very simple kind of dashboard in your checking, your digital account or your credit card app, where you can see those upcoming and recurring expenses and then manage them can make a really big difference. That's one example that's in our standards. We talk a lot about money labeling. That's another practice that has a lot of evidence behind it, where if within a budgeting tool, the ability to set aside and say, this money is for my rent, and this money is for my my kids' childcare, this money is for my medical bills. There's a product that some of you might use called YNAB that does that really well. These are sort of evidence-based practices that are not yet widely adopted across the industry, but can make a really big difference from a design perspective.
I find it just absolutely shocking, the level of financial unwellness in the richest country in the world. Other countries. Causing us to be so financial.
That is a really good question. I don't know that I have. Do you might have a better sense.
I always hear about the Germans. They don't want to borrow.
Yeah.
Maybe they're better.
I don't have that data.
I don't.
I mean,
I don't
maybe
know
you
whether-
can.
I do remember this. I don't think this has changed. We have a lot of built-in volatility in our economic system, whether it's healthcare expenses. If you live in France, your economic growth is not what it is here, but you're not going to go bankrupt. It's one of the leading. It's always has consistently been the leading cause. One of the leading.
I think US is built on the credit concept, right?
Yeah.
Right. I think I kind of want to start there, right? Because I lived in Australia for a long time. Then when I moved to US, without credit,
First question.
I was encouraged borrow. You have to borrow money to build your credit, right? I think US traditionally it's all about borrowing. Savings is probably not on the top of the rank when you think about it, right? But maybe that's changing, right? I think what you guys are doing, financial health, you kind of, and we in UNFCU also, we're doing a lot more talk about savings, about encouraging our members, but our members are very different because we are global. So like, Asia, Asia is generally quite high in savings. That's part of a cultural thing as well.
Yeah.
So I think for UNFCU, we do see quite a broad landscape because of the fact that we see the diverse global landscape. I think that could be the driver. I know sorry, your hand was up. I want to go there. I think we should go to him.
Sure.
Certainly, bank and the development of the concept. Concept seems sound. It seems like it's profitable. The risk factor is much lower than normal models would assume. I don't see a massive adoption of larger banks and financial. They want to expand their market share or provide better behavior for a long-term loyal customer who is not great to have.
We'll probably have a whole panel just on that. But I mean, I feel like the one answer is it's not that profitable unless you are really, really, really sticking people with your interest rates.
Sure.
You know, I spend a lot of time explaining to folks why somebody, you know, in I don't know, Kenya or Ghana might pay the same rate on a loan that I pay on my credit card because it seems extortionary. But then when I talk through what is the cost to administer $600 loans, to travel to rural areas where those borrowers are located, to hedge the currency risk, you know, to cover write-offs, like all of a sudden there's not a lot of margin there. And there are institutions, I mean, in some Southeast Asian countries, you know, microfinance institutions are among the largest, best capitalized publicly traded companies. But those institutions have really increased the interest rates they charge in order to generate that type of return on equity. And I mean, whatever, I'm not here to criticize that, but those are not the institutions that Kiva typically seeks to work with. I think that's probably the biggest one. But, you know, increasingly we do see, especially in the US, large financial institutions see the borrowers that we're working with as a pipeline. They want to start thinking, okay, like, you know, this person, they showed they could pay back a $15,000 loan. Like maybe it is time to bring them in. Maybe they do need a, you know, a better, more flexible deposit account, or maybe they would take out a small business loan. And so, I mean, I don't want to name names, permission to, but a couple of quite large institutions have recently brought up, like, how could we start to think about your customer base as being more than just, you know, a destination for our philanthropy. And to me, that's a good sign.
Yeah. Yeah, I was going to add that in the I know this wasn't, you were speaking more about the global market, but in the US market, I think the story is sort of similar, right? It's very costly to underwrite a very, very small dollar loan. And so most banks, traditional banks and credit unions didn't do it for many years. And those like more online based lenders that would serve that market, especially for the very like, you know, subprime credit customer where risk is high, would do it at very, very high rates. But what we're seeing, going back to the original theme around innovation and where we see potential for innovation, is it is becoming much more possible, and more institutions are adopting an approach to cash flow underwriting, where because if they have a checking account relationship in particular, or that they can partner with an organization who has access to that data. JP Morgan Chase just announced the other day that they're partnering with a company called Nova Credit that does exactly this, to get that data to be able to see someone's spending, and then use that for underwriting at a much more affordable rate, to be able to make smaller dollar loans, which expands credit access for those who otherwise didn't get a chance to access it.
So, but I think what I'm thinking about is this question of how, you know, the question you originally asked about product development, there's different types of data, right? There's the experiential data of focusing in on a specific problem set and people who are living that, and then measuring it. But then the need to really incorporate data within the actual product design so that you can continue to find the opportunity space within markets that were not considered profitable or not considered desirable. But then there's the third thing that I'm hearing, which is the question of incentives. What is the objective? One of the challenges with scaling, and it's why, you know, when we were thinking about different models, is that profit does incentivize scale, but it also creates, you know, interesting mechanisms that may raise the expectations around performance that need to be at a higher level versus more of a nonprofit model. So I do think I think it's interesting that there's a recognition of this on-ramp, that maybe you're building a group of individuals who are now become more credit worthy by creating a different model.
Yeah. How do you see AI affecting all?
I mean, I think it's why I was starting to focus in on this question of data. And we were going to talk about open banking. Everything is starting to get there's a lot of competition out there. Right? One of the things that you talked about, wallets, mobile payments of 10 years ago, 15 years ago, was kind of like boring. I mean, or more boring. I mean, you like basically open your inbox and you're like, oh, apparently stablecoin, apparently, so there's a lot of competition, real-time payments, all these different convergences of opportunities to pay and receive money in different ways, to use the data that's around the transaction of and the holding of resources in new ways. I mean, I think it's going to shake up the note that I wrote to myself was it's going to break up value chains and reassemble them. That's what's going to happen, I think.
I'd really be interested to hear what you think.
Well, for you,
Oh, sorry.
for you,
Yeah, I mean, we are very, very focused on this question of AI, particularly as it relates to how it can make financial advice much more accessible. We really believe in the potential, but we're also very concerned about the potential risk if it's not done properly. And what we know from some of our early research is that there's first of all, a really big trust gap, right? Most people aren't adopting or using financial, AI for financial advice because they don't trust it. I think we have some data that suggests that less than 10% of people are going to like an AI chatbot, which makes sense, right? We're very, very early in the adoption curve. Much lower than other sources of advice like friends and family or your financial institution or your employer, right? And of those who say they don't use it, it's because about a third of them say it's because they don't trust it. And so there's a big trust gap, right? And for really good reason.
Do you want your chatbot to be? I mean, maybe your financial institution should embed intelligence.
Well, right, but that's the road we have to travel, right? Because the potential is there, but we're not there yet. And just another interesting data point. There's an organization we partner with that actually tested AI models, and they asked they tested 22 AI models, and they asked more than 500 finance-related questions just to test the accuracy of the output. And none of these models of the 22 that they tested were more than 50% accurate in terms of like their ability to like provide accurate information, like do calculations for you. And they were expensive, right? These models are still, many of them are very expensive for people to use. So we're very focused on like, how do we begin as an industry to think about making sure that the AI models are trained on the right data so that actually represents people's like lived financial lives, right? And particularly the like underserved consumers. What are those data that they need to be trained on to make sure that they can provide accurate advice? And we are really focused on making sure that there are guardrails in place. And we, it's unlikely that it's going to come from the government sector. I think the industry needs to come together and decide how do we make sure we do this within a set of kind of accepted standards for what, fair, responsible, unbiased financial advice is going to look like.
We saw a really similar effect. We were able to offer like free subscriptions to like an upgraded LLM to US entrepreneurs, and the uptake was very, very low. And I would attribute that probably to a mix of both like sort of lack of trust, but also like lack of time and lack of comfort and familiarity. So I agree with you. I think in addition to making sure that the products are designed well and created with safeguards in place, also like giving people the tools they need to feel like I can ask these questions. I'm not going to give it a bunch of personal data because I don't know what's going to happen to it yet. Giving people that level of comfort. I mean, we've been like, I feel like also just delineating between like machine learning, things like that have been implemented and used for a while, versus this next phase of like, oh my gosh, like Gen AI is in everything. Like I can't, it's like every time I reach out to customer service now, it's a AI chatbot. And I do think the experience is probably very different depending on where you are in the income spectrum.
Building on your point about standards and like the evolution of product development in this space, do you see an appetite to have collaboration and thinking about what good looks like, and use the power of the models, but basically in the context of a governed financial institution with clear incentives, but balanced incentives, right? Because that's the question when it's making decisions, is in whose interest is it making the decisions. There are ways to do that well, but it's not going to be throwing it at the latest model that's out in the ether.
Yeah, we're very early in our conversations around that, but yes, I think we do see an appetite because I think everyone sees the potential. Like the risks are very, very clear, right? The harms, the potential harm for harm is very clear. And so if we want to, I think there is like a strong appetite to collaborate to come up with those standards. We're just in the very early stages of it.
But like even the example, building on the point that you gave, the example of like the transparency around exposure and due dates, you know, could you aggregate the due dates of your 5 buy now, pay later loans that nobody knows about at your bank, plus the auto pay, plus the, you know, commitment that you made to your brother Sam, who nobody knows about, like to give him money for, I don't know, his car payment. There's an opportunity to use intelligence to help people manage real decisions and real commitments that they've made. That's just not how we've been designing things. Right. To this point, we've been designing around product capabilities, not human experiences. So that's kind of goes back. At least this is my big philosophies, which is like if we tend to come to market, whether it's payments or banks or whatever, around like I'm in the credit card business or I'm doing this, I run savings. What are the journeys? What are the experiences that customers, whether they be small business owners or people who are planning for certain things, can we re-architect? And I think that's the part where I think that there's some opportunity to kind of decompose what have been very ossified processes. Yeah.
I think just following up on that, for many of you work in partnerships, and there's could be opportunity for unusual or partnerships with some of the tech giants that people are. This party who knows about your brother, your find out pay later be paid, that's Google if you're using counter.
Right.
Is there something that are there opportunities to partner in ways with trusted or more trusted entities that have?
Yeah, and I think it goes back to this theme around trust because like what's in it for the companies that are creating these models? At the end of the day, we live in a time when there's a real trust gap. And I think with these emerging technologies that are very, they're so quickly evolving and frightening for many, right? Because we don't understand them. I think there's like an even greater incentive that to do it in such a way that generates trust. So I think that's sort of where we're hopeful that we'll see the will to collaborate to define those guardrails because it's necessary for their business, right? They need to be trusted institution.
Yeah.
Just a quick question. I think part of the pie is underbanked or non-banks. Up to 30% of the pie. Here's some of the new technology. Since I worked at NBC. At the time I was doing it was next time and the child credit got a lot of people to get into it.
I think that goes to the financial inclusion, right? I think mobile wallets are one way. The digital payments is one way to get the unbanked into the economy, the financial economy, right? This is what happened in the big countries like, sorry? Correct, the wallet,
Yeah.
China, India, Brazil. That's how the people have all be part of this financial inclusion. Africa is the same. It's amazing how financial inclusion has been successful in some of these markets. It's because of the fact that people are able to store money in their phone.
Mm-hmm. So kind of that answer.
Yep. Well, it is an alternative, right, to your traditional banking system. It is an alternative because that's how you find that in Africa, a lot of the people have now been able to, basically, and it gets them out of poverty as well, because that's one way we talk about, financial wellness, financial inclusion, because that is also one way to get a lot of the people out of poverty, that they can actually store money, if you want to call it, in their phone. Correct. And I think we're seeing a lot of that happening, Southeast Asia is when we were talking about the product design, like how we also look at it. I always say, keep it simple, right? I think for UNFCU, it's a little bit different because we're a closed loop model. So we really have to look at our members around the world, different countries, they have different needs. Like Philippines, we know that the Gcash mobile wallet is so powerful over there. The adoption's been, it's like Kenya M-Pesa. So from our perspective, whenever we look at product or service design, we look at what our members' needs are. That's kind of where we start. And then from there, we kind of work back, make sure that, we meet the needs of our members around. In different markets, we got to think about the different needs as well. So it's kind of unique that way.
I think there's an analogous trend happening in the US too with P2P payments and companies like Cash App that started just as a mechanism to create, to pay someone or to split a bill. And we see more and more of those companies trying to expand their products to become more of a full service alternative to a bank. And, even when they report on their metrics, one of the things that they report on is what percentage of their customer base considers them their primary financial institution by whatever metric or, that they use to define that. So they really are trying to compete with the large FIs, the traditional FIs, to be that center, of a person's financial life. But the entry point has been the very high adoption of the P2P pay payment.
The other I mentioned globally is micro insurance. I feel like the equivalent in a lot of countries to like a catastrophic medical event in the US is needing to pay unexpected burial expenses. So affordable burial insurance, if your livelihood is dependent on a bicycle, having insurance for that bicycle in case it's lost. Those are game changers, and they bring people into the ecosystem. Then maybe they're able to have a savings account. They are making and receiving payments. So I think that is another product that's brought a lot of people in. And honestly, I think it has been one lifesaver for some of the legacy financial institutions in the global South, maybe that otherwise would have just been totally left in the dust by the mobile network operators and the other people offering mobile wallets. Is that somebody says, well, this is great, I use M-Pesa, but I really need to have this product as well.
And I do even see in this country, like once you have experience with that, then you're more open to actually even considering mobile wallets and other things from traditional financial institutions. It's one of those experiences where if somebody doesn't feel that they belong in a bank, they won't go into the bank. But if it's on their phone, it democratizes even traditional bank services. Yeah, we should wrap up.
You mentioned insurance and M-Pesa enable. Question. Micro lending has been around for several. Model was basically the same with promo here in Latin America. Changing the model and
we work with an increasing number of partner organizations that we would consider lenders, but they're not making like small business like loans, or they are basically allowing people to finance productive use assets like solar irrigation pumps, home solar, which obviously enables better health and education. And so I would say it is what we are beginning to see is a lot of like GE Capital or John Deere credit, where these companies that provide really critical infrastructure that's not being built by the government are beginning to finance that, which is still really a credit product, and they need that credit expertise, but they're not just dispersing cash for someone to invest in fertilizer or school fees.
Interesting. Yeah, I think we're at a point of wrapping up. This has been a really diverse conversation. I want to thank you guys for jumping in, and for you guys jumping in and sort of asking the things that were interesting to you. We're all around if you have questions, and thank you.
Yeah, that's one of the hallmarks of NYPAY events is that everyone asks questions. We don't wait till the end. So we're allowed to stay here at least another half hour networking. I'm sure there's still some wine left. So thank you all and.